The stock market is a beast. It can turn on you in a heartbeat, and right now, it's feeling the heat. The United States and Canada, longtime allies and trading partners, are locked in a bitter trade war. It started with tariffs. The US president, never one to back down from a fight, slapped hefty tariffs on Canadian goods. Canada retaliated. The situation escalated quickly. The impact was immediate. Stock markets around the world shuddered. Investors, always skittish, started to panic. The trade war threatened to disrupt the flow of goods and services between the two countries. It also threatened to upend global supply chains. Uncertainty gripped the markets. Fear replaced greed. The US claimed its tariffs were designed to protect American jobs and industries. Canada saw it as an attack on its sovereignty. The rhetoric heated up. Newspapers ran headlines about trade wars and economic calamity. Experts warned of a recession. The situation was tense, and it was about to get a whole lot worse. China, the world's second-largest economy, was watching closely, and China was not happy. The trade war between the US and Canada was bad for business. It threatened to disrupt global trade. China decided to act. China retaliated with tariffs of its own. These tariffs targeted key American industries. The stock market, already reeling from the US-Canada trade war, went into freefall. Investors panicked. They sold everything they could. Stock prices plummeted. The Dow Jones Industrial Average, a key indicator of the health of the US stock market, plunged over 1,000 points in a single day. It was the biggest one-day point drop in history. The S&P 500, another major stock market index, also suffered heavy losses. The Nasdaq Composite, which is dominated by technology stocks, was hit particularly hard. The global economy was in turmoil. The trade war between the US and Canada and China's subsequent retaliation had created a climate of fear and uncertainty. Businesses held back on investment. Consumers cut back on spending. Economic growth slowed. The International Monetary Fund, IMF, which monitors the global economy, issued a stark warning. The IMF said that the trade war was a serious threat to global economic growth. The IMF urged countries to resolve their differences and avoid further escalation, but the damage was already done. The world was on the brink of a trade war-induced recession. Technology stocks, once considered invincible, were hit especially hard. Apple, Amazon, Facebook, Google, and Microsoft, the so-called FAANG stocks, all saw their share prices plummet. These companies, once the darlings of Wall Street, were now facing an uncertain future. The trade war was disrupting global supply chains. Many tech companies relied on components and parts from China. The tariffs imposed by the US and China were making these components more expensive. This was squeezing profit margins and forcing companies to raise prices. Consumers, feeling the pinch from the slowing economy, were cutting back on spending. Demand for smartphones, laptops, and other tech gadgets was waning. This was bad news for tech companies, which were already facing headwinds from the trade war. The outlook for the tech sector was bleak. Analysts predicted that the trade war would continue to weigh on tech stocks for the foreseeable future. Some even warned that the tech sector was heading for a bubble burst. The good times were over. The party was over. The tech boom was over. So, what's an investor to do? The stock market is a scary place right now. But it's important to remember that the market has weathered storms before. It will weather this one too. The key is to stay calm and focus on the long term. Don't panic and sell everything. That's what the market wants you to do. Instead, take a deep breath and assess your portfolio. Are you diversified? Do you have a mix of stocks, bonds, and other assets? If not, now is a good time to diversify. Diversification is your best defense against market volatility. It's also important to remember that the stock market is forward-looking. The market is always trying to anticipate what's going to happen next. So even though the trade war is causing a lot of uncertainty right now, the market is already starting to price in a resolution. In other words, the worst may be over. The stock market could be poised for a rebound. But even if it doesn't rebound right away, don't panic. Stay the course. Stay invested. The market will eventually recover, and when it does, you'll be glad you stayed invested.